Hi guys, welcome to my channel Forex Mentorship. If you are new here, please click the subscribe button if you love my videos, and if you are a returning subscriber, thank you for being part of this channel. In this video, I'll be talking about a case study on gold. I had this set up yesterday, Friday, before the end of the market closed yesterday, and I didn't take the trade actually because gold is not one of my peers to trade. I normally trade the EU, GU, and Nasdaq. Though I would have taken the trade, okay, but I was already asleep when my entry was triggered. But I had the analysis marked out and sent to my friend. I was trying to tell her about the pairs I was looking to trade for New York session, and I showed her that okay, this gold I'm looking to buy, and same with GU and Nasdaq. Okay, so but I didn't end up taking the trade as I was fast asleep later on. So but I just want to share this with you in case you see this type of setup on any other pair in the coming weeks or coming months in the foreign exchange market. And as you all know, the SMC, smart money concept or smart money technique, works on all pairs. Okay, it works on all pairs. Okay, and if you've watched mine, so this is the daily time frame on gold, and since last year we've been looking at this set of equal lows right here to be taken out for a very long time. I think around this time, August last year, I was actually hoping that this would be taken out, but it wasn't taken out. And even this year, at this level, we thought it was going to be taken out, but still wasn't taken out. But now we got that break, and the liquidity sitting right here for the past years has now finally been taken out. Okay, so now let's now get into the analysis that I want to share with you. So yesterday, coming on the chart, why I actually checked on gold, because I would normally not trade gold. Why I just checked on gold was because yesterday I had a sell bias on Euro USD, but my GBP USD and Nasdaq were giving me a buy bias. So I knew one of my bias was wrong, okay, but I couldn't pinpoint which exactly, because most time when I trade EU, GU, Nasdaq, most time I'm always trading a particular bias, probably a buy. Almost everything will give me that buy bias, and if it's going to be a sell, everything will be pointing me in the direction of sell. But yesterday EU was giving me a sell bias, and from the London session actually, while the other ones during the New York, close to the New York session, I was having a buy bias. So that was why I decided to come on gold and check what gold is doing, because as you all know, gold and EU, they kind of correlate, they move also like together. So when I got on gold, I then saw this beautiful smart money technique textbook setup on gold. Okay, so normally if you've watched my video on the Asian range strategy that I have on my channel right here, you realize that from that video I said we always have the Asian range eye, which is right here. I always turn on my kill zone indicator right here. This is the only indicator I use to mark out my Asian range. Okay, so from the high and the low, we always have liquidity sitting both at the high of the Asian range and at the low of the Asian range. So what I normally trade during the London session is now whatever we have during the Asian session, we always have that manipulation during the Asian session, or some consolidation, and mostly during the London session we may actually take out the Asian range low sometimes during the London session, and we have this move right here for the London. Okay, and later on during the course of the day, price for the New York session, it will now be the opposite side, taking out the Asian range high. Okay, so most times this is how the market moves. Most time the price action we see on the charts most time, and same thing also for the other for a buy bias for London session. Once we have the Asian range movements during the Asian session, we may have the first push up for the London, then we have a corrective phase probably during the New York session. Okay, so this giving us the London push and later on the New York push. So you will normally see this kind of price action on the chart. Okay, so let's move now to the chart and get some and see the same example on gold. Okay, so coming to my chart on Friday, I saw that the Asian range low of this gold was being taken out. Okay, so let's move to the 15 minutes time frame. Seeing all of this, and also with this massive push that we have right here, I think it was this from, okay, this was from the CPI. So we later add this push also. So all of this push, as you can see, we have a big fair value gap, FVG, or what we call imbalance right here, right? That needs to be filled. So coming on the chart on Friday, I was then looking, okay, what can possibly be the analysis for this gold? And as you know from the higher time frame the other time, we are just taking out, let me quickly go to the daily time frame. We are just taking out these equal lows right here that we have right here. Liquidity have been grabbed. So, and most time when we have a break of structure or liquidity grab like that, price tends to push back up into the zone that caused such break of structure. And you can see we can see in the market that we have the incentive to push back all the way up to all of these level right there. Okay, so that was why it was easy to look for some sort of buys in the market. And now we also have the Asian range low being taken out. Okay, let's mark that out. We have a significant low. The last lower low was also taken out. Okay, Asian range low was taken out. So now for us to be able to buy, in order to bring price up into this zone, this FVG, for price to fill it up, and also as you can see, we have this sort of trend line liquidity right here. We have this liquidity right here as well that price will later grab, and also we have this Asian range high liquidity that is yet to be grabbed. But for us to buy, we want to make sure our trading conditions are met. Okay, the price action that we need to see from the candles right here, the patterns from the structure needs to be we need to get the confirmation before we start buying. We will not just execute a buy. And for us to be able to execute this buy, we need to start marking out our structure gradually. Okay, as you can see, we have this as the last low, and this being the lower high that gave us this lower low. This lows didn't break this, so this is our next lower high. Then now we are having this lower low, right? Okay, but if we are to analyze the internal structure now, okay, let me just continue playing this for. So, okay, as you can see again now, we had this high, we created this low, and just as you can see, once we broke below this low again, this now being the last lower low that we have in the market. Okay, this is now giving us another low right now. This this lower low is being taken out with this, giving us this lower high right here to be the last high that we need to see that needs to be broken. But let's keep playing and see. So let's see, let's continue playing and see if we have some kind of retracements. Okay, so as you can see now, market is gradually pushing back up, and before we can buy, we need to see this high broken. So if you are not actively on your chart, you want to set an alert at this level right here. Okay, you want to set an alert right there for where price will break that high. And as you can see, we got that break of structure, and not only this high was broken, you can see this got taken out as well. And not just that, we had multiple eyes being taken out. Okay, we got all of that break of structure. So now the next thing to start doing is to start looking for a point of interest from around this area where we can get an entry into. Okay, and this is where I always advise you go from time frame to time frame in order to be able to get the clearest a very clear point of interest, like a demand or imbalance or whatever. So now we can try to check the 15 minutes time frame if we can see a clean point of interest when the price is coming back to mitigate such zone. Okay, so at this level right here, we can actually cite this candle right here. Okay, and just below it we have this demand level right here with imbalance that needs to be mitigated. Okay, so as this is not so clear enough, we can try and check other time frames in order to see if we can get another possible zone. As you can see on the 1 minute time frame is not so clear. Let's check the 10 minutes time frame. So this is what I will normally do. I want to try and check different time frames. Okay, so this is the 10 minutes time frame. On the 10 minutes time frame, we can see that we can push this up to around this level. Okay, and sometimes you can bring out your Fibonacci retracement tool from the last swing low to the retracement that you are starting to have, and anywhere that falls around this discounted zone. The discounted zone is around 61% or the 78%. Anything below the equilibrium is okay to take a buy trade from. So at this point in time, this can now be a point of interest for this buy trade. Okay, and where will we be taking our profit from? And just before that, you can see now that following the graphical representation that I did the other time, this is the Asian session, this is the London session that we have. The London session has cleared the Asian range low, which is now signifying that we will likely breaking above these several lower highs now. We are now having the corrective phase for the New York session. Okay, so just keep that in mind. Or sometimes if it's the buy side that got taken out during the London session, most likely the for the New York session, we'll have this push to the downside. Okay, so now let's continue with the analysis, and we have that right there. Let's move back to the 15 minutes time frame, or let's even check the 30 minutes time frame as well. As you can see, okay, even on the 30 minutes time frame, we have this imbalance right here, and at this particular point, I can decide to check for the 50% of this FVG that we have right there. Okay, we can get our entry at the 50% of this FVG. That is the space that we have right here between the last candle up here and this candle right here. Okay, giving us some sort of optimal trade entry. And for take profits, we'll be looking for the Asian range high to be grabbed. Okay, this is a zone where you can take partial profits from. And finally, we want to take profits at this high right here. And as you all know, Friday, you need to be in and out of the market fast. You want to be taking your profits at significant level. Okay, so let's have it right there, and let's see if we got tapped in, and if this trade will end up being a winning trade for us. So, and as you have right there, we got almost that tap in. Okay, almost the tap in, but market later came back and we got tapped in properly. Okay, so but let's take for example at this particular level right here from the 30 minutes FVG that we have. If you had set a buy limit at this level, you wouldn't have been tapped in. Okay, and that's why sometimes you want to set your alert so that even if you are not on the chart, if your alert goes off, you'll be able to come on the chart and you can actually execute a buy entry probably at this level once you see that market is already pushing up. Okay, and as you can see, for people that were actually patient enough, markets actually came back, but there are some scenarios where markets won't come back like this. This might just be the only mitigation that we have, and markets will start pushing all the way up. But Good thing market came back and this point of interest was actually tapped, and as you can see, before the market closed, markets ran all the way up over 200 pips right there, and before the market closed. So at this point in time, even if your take profit was not it, you should have been trying to get out of your trade. And you can also try to check higher time frames, because sometimes on the lower time frame you might have imbalances to be filled, whereas the higher time frame can have a level of supply or demand that price might tap and turn back. Okay, so this is a clean textbook setup on gold, following the normal simple SMC price action. Simple price action: the break below the Asian range low, the London move, and the corrective phase for the New York session. Okay, so you want to look out for price actions like this. You want to look out for zones where you have FVG or imbalance. You want to look at zones where there are liquidity. Okay, this market tends to follow all of these, and with this you'll be able to catch nice moves and get profitable trades out of the foreign exchange markets. I hope this video was of value to you. I hope my explanation was easy to understand enough. And till next time, when I'll be dropping another nice video. This week I'll not really be going over trade recap, because after the CPI, I did a video on the CPI. After the CPI, we didn't really have so many we did not really have a nice price action. So after the CPI on Euro USD, for example, we had all of this price action. I actually took a sell trade right here on Friday on EU. I took profit at the previous daily low, which was right here. I took profit right there. I left my remaining position, and it was stopped out at break even for my remaining position, but I took out most of my profits right there. So there was not really much to trade after CPI. And as you all know, anytime we have CPI or any big news in the market like this, the following day sometimes or that week needs to correct itself, and you might likely not get a nice price action on the chart. So sometimes it's just best to stay away from the chart. Okay, just stay away and wait till probably another week when the market will be good to trade again. Okay, so till next time, this will be all for this video. Thank you for watching, and if you are yet to subscribe, please click the subscribe button and let this channel grow. Okay, bye.